This is Investor Perspectives. I'm the host of Investor Connect, Hall T. Martin, where we connect startups and investors for funding. In this episode, you'll hear about a new company in the gifting sector called Gesture. Our featured guests are Paul Capone, Managing Partner and Portfolio Manager at LunaCap Ventures, as well as Ivan Allo and LaDante McMillan, Managing Partners at New Age Capital, all investors in Gesture, and Ben Labra, co-founder and CEO of Gesture. Gesture is an on-demand gifting platform used to send gifts in a simple way through a mobile application. It is tackling the problem of unreliable delivery, overpriced gifting, and horrible customer service using advanced technology the same way Uber took on the yellow cab industry and Netflix took over Blockbuster. Since January 2019, Gesture has delivered thousands of gifts, grown more than 245%, is now available in more than 35 cities, launched new products and revenue channels, and helped thousands of people stay connected in these unfortunate times. Gesture is a company that believes in connecting people using emotional tangibility to make the world smaller and more personal again. Our host today is Ashley Matisse. I hope you enjoyed this episode.
So Ben, I understand that Gesture is an on-demand gifting platform used to send gifts in a simple way through a mobile application. Could you just tell us a little bit more about this?
Yeah, absolutely. Thanks again for having me. Yeah, I think you hit it right on the nail head. It's exactly what it does. We really wanted to kind of reinvent this concept and make it simple. So if you think of like a 1-800-Flowers meets sort of like a DoorDash or an Uber type of business model, you can send wine, flowers, champagne, practically any sort of type of gift that we're adding daily, and you'll have it delivered in real time as kind of that moment happens versus, 2-day delivery, next day delivery when kind of the moment surpasses. And, most people are kind of, sort of tired of that concept where, you have 2-day or even next day delivery. So we've kind of figured out a way on how to kind of bridge those two things. And it's been pretty awesome lately. And so, you can get anything, food, you can get movies on demand, and now you can have your gifting done on demand. And that's what Gesture does.
Wonderful. Thank you. And now, Paul, we're very interested to find out why you invested in Gesture. But first, if you could just tell us a bit about your background as an investor.
Yeah. So I started in 2014, moved into venture capital, and I previously was working with companies that were in distress. So it was more on the debt side. After working in VC, I saw a lot of startup companies that were actually ripe for a lending instrument versus a traditional venture capital instrument. And so that was the genesis of LunaCap Ventures. So LunaCap Ventures, we are now in our second fund, and we focus on investing in military, women, and minority owned or run companies. But what's different is with the lending instrument. So the best way to think about it, it's just a car loan. So you take out a loan, and then you have to pay a monthly payment until the loan is paid back. And then on top of that, we take a little bit of equity. And I would say that it's about 10 to 20% of the equity that we generally do, or generally that a traditional VC would take. So for companies that are looking for that growth and looking for funding that focuses specifically on inventory or marketing, that's when you would take on venture debt. I don't think there's a difference between one being better than the other. It's more of a timing issue in terms of when a company would take debt versus equity. And then personally, I also started just kind of my own personal investments, where those are traditionally more kind of VC angel seed rounds. And because I also enjoy startups that may not necessarily be right for traditional venture debt, but are great for venture capital. And so overall, I've done about 20 deals in total between the two of them. And that's basically been my experience. And these are companies that have been early stage, so just idea all the way up through companies that are doing $20, $30 million in revenue. So companies anywhere in that, I guess, in terms of that financial profile, that's where we go in.
Okay. And what types of deals do you normally invest in, like sector, that kind of thing?
Yeah, so we're industry agnostic. On the venture debt piece, we generally do about $500,000. That's our ticket size. And we're looking at companies that are doing typically between probably 2 million in revenue all the way up to 10 million in revenue. We might go in alongside a traditional VC raise. So if a company is raising 1 million or 3 million, they might want to not raise all of that in equity and actually just top it off with some venture debt to protect the ownership. So we're much less dilutive. But as long as the company has that cash flow or has the ability to service the debt, that's the most important thing for us on that piece. Once again, industry agnostic, but our companies on the venture debt piece tend to really focus more on CPG companies. So a lot of e-commerce companies are a great fit for, so any companies that are kind of in that threshold, that would be a great company. We'd love to talk. And then on the personal side, that has been, once again, anything from companies that are buying space companies. So companies that are doing that. We have real estate, Gesture, and these are companies that I kind of personally know the founder. I truly believe in kind of what they're doing. And I think that's also industry agnostic, but because it's more about the team, the idea, and the capability for them to grow without having those financial constraints that are typically associated with the venture debt piece, that's where this kind of gives me that flexibility to invest on a more traditional equity play.
Great, thank you. And so LaDante and Yvonne, we are interested in learning about why you invested in Gesture. But first, I would love to know about your background in investing. LaDante, you want to kick us off?
Yeah, for sure. So Yvonne and I, we've kind of been starting this business together. So we've known each other for a long time, since we were 17, 18 years old. So our stories kind of coincide. But I would say I got into investing, specifically VC investing, in 2015, 2016, once we actually launched New Age Capital. Yvonne and I had started a company together, realized that there was actually an opportunity in terms of asset allocation to specifically Black and Latino entrepreneurs who were struggling to get past the seed stage. And so in starting New Age Capital, we were able to kind of network our way and finesse our way really into getting Lightspeed Venture Partners as our first kind of anchor investor and a $500,000 pool of capital so that we can make investments into companies like Gesture. And that took place. We wrote our first check in 2018.
Great. Yvonne, I suppose it might be a similar answer, but what is your background as an investor?
Yeah, it's pretty similar. I would say the one detour there is, so my background is, so I'd actually studied finance and I originally was interested in real estate and real estate investments. So that's how I got my initial foray into the investing world, but always more through the lens of entrepreneurship. And I think, which is something LaDante and I immediately were drawn to, I think technology entrepreneurship was a little different for me. And the way we talked about it is, whether it's real estate investing or other forms of entrepreneurship, they tend to be very capital intensive businesses, or at least as you're trying to build them. And I think what excited us about the technology space is that with the reduced cost of building, at least just putting out an MVP or a product because of cloud computing and a lot of new technologies, it was going to pave the way for a whole new group of individuals that had historically not been involved in this ecosystem to get involved in investing. So I think LaDante and I looked at that, saw the tailwinds of the industry, and figured this was the right time to actually make our mark and really, really have an impact. So, as LaDante mentioned, that's when our journey started.
Very cool. And now what do y'all normally invest in?
Right. So our focus is pretty specific. So we invest in Black and Latino founded and led technology startups. So the founder CEO of the company has to be Black or Latino. And we focus on what we call core seed stage companies. So for us, the product has to be in market. There has to be a little bit of traction and revenue for us to see a little bit of momentum there. And we focus on founders solving what we call real world problems. So things where we believe there's an immediate impact. And generally, when you have some customer traction, that means you're solving an immediate problem. So we focus on $1 to $2 million seed rounds, investing across the country, and primarily core seed. And we do look at some Series A, but primarily we focus on that seed stage. Healthcare, financial services, marketplaces, the on-demand economy, construction tech, real estate tech, advancement of the workplace and workforce. And I might be missing one or two, but that's primarily where we look to build relationships with entrepreneurs, building interesting companies.
Okay. What made y'all to invest in this deal in particular?
Actually, Yvonne, do you want to say how because the relationship came through Yvonne, and I can kind of talk about the discussion we had.
Yeah. And I forget now, it's been a few years, so I forgot who connected us, Ben. But when Oh, it was Chase. Right. So a friend of ours who has a pretty strong like startup network and is big in the ecosystem here. He connected us, and I met Ben. I think it was at a coffee shop. Yeah. Coffee shop. I want to say it was back in probably 2018, maybe summer of 2018. And as we spoke, I think the initial thing we both got, and this is what excites LaDante and I about our strategy with New Age Capital is just walking into meeting each other, there was just kind of like, just due to identity, there's just kind of like unity there where we fundamentally were coming into this situation with humility and just wanted to get to know each other, right? Like we're still building our VC firm, but like I wasn't trying to be this big time VC. I was just wanted to learn about what Ben was building. And Ben, who has a pretty strong background and career, came into the conversation as well, just wanting to share what he and the team were building. And I think from there, we kind of had that, there was that authenticity where we wanted to keep building. And from then on, he kept us updated with the traction and what they were building. And I want to say it was maybe a year later that we actually made the investment in Gesture. But something that's big for LaDante and I is founders just doing what they say they're going to do, right? A lot of people have ideas. A lot of people want to do things. But when it comes to the execution of it, you could be a great storyteller and have the grandest of visions and the market could be amazing. But what are you going to go out and do when your back is either against the wall and you don't have all the resources you need, or you do have the resources and people are looking to you to actually, accomplish certain things. So anytime we caught up, they either did what they said they were going to do, or they were even a little farther along that. And then Ben was just always honest about, the hiccups they were having, the mistakes. We were always honest about where we were in our fundraising and trying to get our firm together as fund entrepreneurs ourselves. So I think through that lens, and, Ben's one of many of our entrepreneurs, but that's one of the traits we generally look for. And I think that's what excited us. And then seeing the market opportunity was the next thing.
Yeah, so I've known Ben now for about 2 to 3 years. We were introduced through just our network, and I met Ben. And I think there are a couple things. One is the market. Second is kind of his background in terms of what he's done and his experience. And then thirdly, I think just kind of the value add that we might be able to have as he kind of continues to grow. So I think number one, I'll kind of talk about Ben's background. He comes from a very entrepreneurial background, having helped out a number of startups, knows the space extremely well, has a lot of folks in startup companies that come to him. And he really knows kind of how to build a company and scale it. And especially on the technology piece, which is a huge portion of building something if you're doing a tech play. And so I've met his team. I know some of the folks there and was just really impressed with how quickly they were able to kind of develop and scale that technology, not only for themselves, but for other companies. And then obviously just his experience. The second reason is I think we do have a focus on investing in military women and minority owned or run companies. As a Mexican myself, and knowing Ben's background, I think there are a lot of companies, and this is a growing community and a growing demographic within the United States. And I think a lot of people might say, well, we're going to do that, but isn't that to the detriment of returns? Versus understanding you can do both good and well. And as a Latino community and as these folks, based off of our network, are able to grow, there's a huge buying power that comes along with that, especially among women companies. I mean, they make up 50% of the population. Women companies probably know how to build companies that tailor towards a woman's needs versus maybe a man who's trying to do something that way. So, if you have a founder that really understands that community, has, I think, tentacles into that community and able to bridge themselves there, that's a big part of it. And so I think there's a lot of gift giving. There are a lot of things that just aren't quite out there right now. And I think Ben does a great job of pulling that together, but also getting into those communities, and especially kind of with the price point. And I think that there's, extended family within the Latino culture, that this is something that we would be able to help introduce him and help him build out that ecosystem. So that's, I think, kind of really another reason why. So it's really, I think, and then lastly, I really do believe that the technology that he's built, the traction, and with the conversations that he's had, the traction that he's already developed here in New York, and as they expand out and building an extremely large team with folks that are coming on board, but keeping very, very tight on the purse as well is impressive to be able to expand and be tight with capital. So I know that that money is going towards the right things. So it was for all those reasons. One, once again, just to kind of reiterate, it was the experience that Ben had, the team that he brought on, their technology, where they're playing, and then I think the cultural aspect. And not he's focusing on everybody, but I do believe there is a huge population that's growing, that is developing buying power, that we have strong networks in as well, and able to kind of bring them in and bring them into the fold as customers, and kind of also helping to kind of cater towards their needs.
Great. And what did you like about the team?
I think we always try to focus on individuals, like Yvonne said, who can execute, who are capital efficient, and who know how to move pretty quickly. And I think with Ben, I think he wooed us over the first call, because we were like, oh, this dude's legit. I think he has a good knack for understanding people. And once he understands people, he knows how to motivate people. And I think he got us motivated after the call. Like, wow, this guy is he's an amazing, amazing founder who understands how to get people going and get people executing. And when we also talked to Daniel, we were like, okay, he plucked this guy out of pretty much nowhere, and he's probably one of the best technical talents that we've talked to. And I think for us, being able to do that at the seed stage is extremely difficult. And one only is able to do that really at a high level through experience and repetition. And I think for us, when we met them and we talked to them about how they even thought about the on-demand market, it was a very different and nuanced approach, and the intentionality behind it was a lot different than what we were seeing in the market with like all these other kind of delivery services. And that intentionality was very evident in who they were as individuals, and we thought that was going to be their key to success, because they were able to leverage something that they understood about themselves and the talents that they had and what they believed to be possible in the market. That was going to be the thing that was going to keep them motivated and keep them going, and also attract talent. And so Yvonne and I recognized that and said, okay, well, you have the leadership of Ben and you have the technical talent of Daniel. That is just the recipe for success. Let's just say, and we didn't think this way, but let's just say they weren't successful with this. These two together can build pretty much whatever the hell they want, because they're just that good. And we know they're going to be successful with this particular thing. And so I think we had a couple of calls, and Yvonne and I just were going back and forth on our own. After we talked to them, we're just like, okay, the possibilities X, Y, and Z. We're always kind of like best case scenario type of thinkers, because at the seed stage, it's very subjective. And so we're always trying to look for the best outcomes. And kind of given the story they were telling, the execution and what they had done up to the point that they met us, you just got really, really comfortable with the market, the opportunity, the technology, I think was one of the big factors too, the logistics technology that they built out. And then they also just fit our New Age Capital profile. And so for us, it became a no-brainer.
So so I think that there are a lot of people who I've already met that are very, very, that I think really truly do believe in what Ben's vision is. And I think his leadership in terms of maintaining, I know, having built companies and trying to keep people on board and really truly believing in the vision, people only stay if they have a good leader and they truly believe that it's going to be something, especially when you're being tight with the purse. And also, I think it's the fact that, like the developers, for example, that he's brought on, I've seen a lot of the work that they've done and just been amazed and blown away with how far they're able to get from just not only, from some of the stuff that they've built, and just very highly skilled, but also very young and very hungry. I think that if you go out, and a lot of companies might try to get the best developers, but the best developers have options, and they can go out and get many different jobs, and they're going to charge you $300,000, $400,000 a year plus equity. What Ben has done a great job of doing is finding that caliber of talent, but also the hunger within the team. And so because of the longevity that people have stayed together, from when I invested to where they are now, they've definitely continued to grow. And I just kind of see that loyalty within the team and amongst each others, and them just impressed with what they've been able to build.
And you kind of touched on this in your answer, but why do you think this company will continue to be successful?
Yeah, I think a lot of it has to do with the team. I'd say the biggest thing is the team and Ben's leadership. I think their ability to move quickly, be efficient, and be capital efficient, as I said before. The only thing that I wish we could have done more of, or done which is essentially what we're trying to do now, is actually give them more money so that they can move a lot quicker than they maybe are inhibited by because of the amount of capital they're able to raise. And so for Yvonne and I think the success is really going to be, it's going to come with more people believing in what they can do like us and just giving them the capital to go to work.
Yeah, I think the other crucial thing too is just the humility that the team has, right? So they don't believe like any of their own bullshit, essentially, right? So it's one of those things where whatever the customer wants ultimately, and they'll take in ideas and thoughts, but they don't think they know too much. They don't think they've built the perfect platform. Hopefully not, but if they needed to stop on a dime tomorrow and completely switch the platform, to providing something, like they would get it done, right? And I think that takes a certain level of humility from a group of people that ultimately they must view this as a North Star. Like, what is our North Star mission? And let's get there, obviously, with integrity, but by any means necessary. And let's remove all ego. And I think when you get the combination of, like LaDante said, talented leadership, talented technical expertise, but also with the humility to move in a way where, look, at the end of the day, you never know what's going to happen. But if we keep iterating, we keep learning, we keep adapting, we have a shot at building something really formidable over the long term. That's the fundamental recipe for success in our eyes.
And Ashley, I just want to add one thing to that. With one of the main sort of features inside of Gesture is something that Yvonne mentioned on our first meeting, which was the social feed. And Daniel and I were like, one, why didn't we think about that? But it was almost sort of that kind of just piggybacking off what Yvonne just mentioned. We stopped what we were doing even back in 2018 to factor that function in. And it's been pretty successful amongst our user base and our customer base based on we were willing to listen and not be so stubborn about, well, we already knew that and that'll come later. We basically took that function and built it in. It's the social feed on Gesture. And so it just gives people the ability to see what they're doing, kind of like you can on Venmo. So that is absolutely 100% without a doubt. There's so much validity to that because we basically take what our investors say and even our customers and really factor it in to see if it does make sense. And when it does, we build it.
So I think that after you kind of see a lot of the potential partnerships, some of the folks that we've actually met on our side, some of the folks that Ben has met, and a lot of the interest, and I won't go into the specifics just because that's kind of under behind closed doors. But having been on the other side, I kind of know what's in the pipeline. I know the partnerships that they're looking to build. And I know that there's a lot of interest, and now it's just trying to figure out, the right puzzle pieces, but those aren't tough puzzle pieces to put together. It's just which are the right ones. Additionally, I've seen the fact that people who have used Gesture and talked with some of the customers before, that the product comes very quickly, that they deliver on what they say they're going to do, and very, I think, smart about focusing specifically on the right areas to make sure they have the business model right and then able to replicate it. So once again, I think it's the traction that they've built just organically on their own, then the partnerships that I've seen, and then the pipeline of those partnerships, and the scalable growth on the other end, having been once again on the other side of the door, that for all of those reasons. And then once again, just the capability to scale. They could have the right partnerships, but if they don't have the right infrastructure to develop that, that's a tough piece, but they definitely have that in place. So for all of those reasons, that's why I kind of see this as a company that can scale quickly. And then with the technology of the last minute, there's so many different things and other verticals that they could go into. I mean, once you have that last minute delivery, it's not just for gifts, and you can start off there, but it could be anything else, and really kind of then partnering with logistic companies. And so there's also those other verticals that they can branch into with the technology that they have.
Great. Thank you for adding that. Gentlemen, what have you guys seen as far as challenges? What challenges has this team faced and ultimately overcome?
I think the challenge that most companies that we find, at least the ones that we invest in, the unfortunate part of being capital efficient is that you always have to find capital to raise because people aren't writing the checks that you need at the earliest stages. And so it's a constant improving yourself. And getting over that capital can be an inhibitor to a lot of different businesses who can't who aren't as nimble and who aren't as qualified as maybe the Gesture team is. And so I think the way I look at their challenges is it's an issue of being able to get the right resources at the earliest stages. But I think the way Ben has been able to navigate that is through his network and through the relationships that he's been able to build within the industry and have some sight of, okay, if our company does well, there's a potential for this type of acquisition, or we're already building these relationships later down the line. So let's say X happens, we already have a couple acquirers lined up. And so even as those challenges approach, I think Ben has been able to navigate the landscape to make sure that anything that does happen, they'll still be on the right side of the journey.
Yeah, the other thing I'll add to that is I think, we've seen during COVID what's happened with a lot of companies and the struggles and just figuring it out. And while there are some industries that have had tailwinds and others have had headwinds, there's still just a psychological aspect of like getting through this period and building a company like this and just maintaining to get to 2021, especially when you don't have a lot of capital. I think it's a challenge fundamentally. And I think, they did have to probably let some people go and make some changes and whatnot. But I think Ben just and the team, they just look at it as like, it's life, right? Like hopefully we figure it out and we take the right steps. But I think they're going to be one of the companies that ends up being stronger for the challenge of this year than a lot of other companies. And I think excited to see where that goes moving forward.
I think the biggest challenge that I've seen so far is just trying to figure out kind of where to build out correctly. I think they have a great product and they could launch anywhere, but just making sure that they launch correctly. So you want to do a New York, you want to do a Chicago, you want to do those really urban areas versus kind of going out into Kansas or maybe LA where things might be a little more spread out. That's just a different logistical feat to try to overcome versus something that's pretty condensed. And so I think that was a bit of a challenge just to try to figure out what presence and where do they want to play. But then what they've been able to do is really figure out, I think, once again, kind of being in DC, being in New York, and then really trying to figure out those spots that they wanted to develop their presence and then build out the right team. So I think that was number one. And then another, I wouldn't say it was too much of a challenge, but, just finding the right people, which they've been able to do. And I think that's just also a testament to Ben's network, to some of the folks that he has worked with before, other entrepreneurs, working with Galvanize and having been there, that he has an extensive network of folks that are willing to come to the table and help. So that's just an added benefit and bonus in just attracting the right folks. I wouldn't say that there was an obstacle there, but it is a challenge to attract that right talent. And Ben's been able to do that very well.
It's great to hear. Speaking of excitement, what excites you most about this opportunity?
Other than Ben selling for $1 billion?
I think you're short selling yourself, man. We're going after $2 billion.
Touche. No, I think fundamentally what they're building, and I don't know how much Ben talks about it, but the underlying logistics infrastructure that they've built, I think there's so many channels and avenues that they can leverage to be able to, on different revenue models for B2B. And the thing that I think is super interesting is they found a unique way to leverage a new kind of B2C relationship, right? I think the social feed is part of that. But I think we've been in this dearth for probably about 10 years now of like new social consumer products, right? Where everything's kind of been sucked up by Instagram, Facebook, Twitter, whatever have you. And what LaDante and I started seeing, and what our belief was that the new form or the new opportunities that'll succeed within consumer social are going to be somehow either transaction-based or attached to some utility. And I think the interesting thing about what Gesture is doing is there's no forcing function here. Like gifting is something people are already doing. They're just kind of creating a digital interface for it. And now when you layer on that social component, it kind of has a built-in virality without it being forced. So it's not like you need to tell everyone, hey, try this new app. But it's fundamentally, hey, as people are getting back to work or trying to, and I want to send a gift to someone, what am I going to use? And then when I'm on the app sending that gift, like it would be great when they receive it if I can share it with the world. So I think there's an interesting virality that's going to come from that. And that kind of self-fulfilling prophecy is what's going to allow them to build a really strong consumer business, but also that will feed into a really strong B2B business as well. And I think there's probably some opportunities we haven't even thought of yet that they can branch out into. But I think what it does is it moves away from, an initial idea of maybe this is something that would be worth $100 or few $100 million if they build the right things and can fit perfectly into another corporation as an M&A opportunity. Now it's like what they're building, and I think the momentum they can get, it can fundamentally be a standalone business that could potentially IPO or get acquired for $2 billion plus.
I think for me, I guess the potential upside, that's, I'll be honest. I mean, as an investor, there's that, I think there's that. And then there also, because we also have a bunch of e-commerce companies, we do have a lot of companies that have CPG type stuff. Once, there are a lot of synergies that I see, not only with, just Gesture on its own, but other ways that we can actually kind of link Gesture with some of our other companies. So as those other companies begin to grow and kind of get to the right stage, there's a lot of overaction and just ways for us to kind of pull the portfolio together where Gesture would fit very nicely with a lot of our other companies. So I think it's the growth, the compatibility with our other portfolio companies, the synergies that we can recognize. And then I think just the kind of the growth that I see based off of what's been going on so far.
Okay. How are y'all helping the team?
One of the things Yvonne and I try to do is stay out of the way. I think once you have a good team that knows what they're doing, our best job as investors is, for one, to provide capital, but two, to stay out of the way. We'll always listen. Ben can hit us up whenever. We're always available to chat. I think one of the best things we can be is a sounding board. And we always like to think through, business model strategy, go-to-market strategy, new ideas like social feed idea. But one of the biggest things we've learned in this industry is not to prescribe what we believe the team should need. Everybody is completely different. Every team has its own differences and needs. And the thing for us is to recognize their strengths and weaknesses and to recognize those needs and insert ourselves when it's necessary, but also at the same time, make sure we remove ourselves and let them go to work and do what they do best, which is why we invested, right? So for us, it is the amalgamation of all of those things, either stepping in when we can or stepping away, but always making sure that we are available. And to be honest, really just being a cheerleader. I think entrepreneurship can be very daunting. You could be very isolated, and psychologically, it just becomes defeating at some times. I think always having some people to call on or having a team behind you that knows they believe in everything that you do and will challenge you at times, that's a healthy relationship to have for an entrepreneur to be successful.
So a lot of it is kind of if they're talking with investors, they kind of like looking at term sheets, maybe thinking about ways to partner with other companies, thinking about, is this the right partner for you? Is it not the right partner for you? And sometimes if there is an attractive, shiny object that might be able to work, maybe looking and asking those questions, that could be short term. However, on the tail end, are there going to be a lot of issues that kind of pop up? Are there just obstacles that you're not seeing? So maybe don't take what's kind of quick and easy right now, but wait for the right opportunity that'll be, I think, most beneficial going forward. So I think from that advisory standpoint, looking at it with an investor's lens, seeing some of the partnerships, and then also just in terms of kind of leadership questions where Ben and I will be happy to talk. And if he comes and says, hey, what do you think about this? Or what should we do? Maybe this isn't working, or should I bring on this person, or kind of what would be just kind of bouncing ideas off of me, because I understand the team dynamics, being able to say, okay, this is, maybe this person would fit right here, and maybe this person fits right here, and just bringing a different perspective. So from the investment standpoint, looking at the terms, thinking things through, just bringing a different perspective, and especially as an advisory role, I think that's what I bring.
Okay, and what else should other investors know about this company?
You put money in, you'll get a lot of money back.
Great.
That's about it.
Right.
I second that.
I think that what you're getting into is a great technology play. I think the biggest thing is the partnerships that Gesture is looking at right now will exponentially help grow the company. And I think that having worked with Ben and knowing exactly, what there are no skeletons in the closet with Gesture, that this is a company, and that Ben he's a seasoned entrepreneur once again. And if you bet on that person who's already seen a lot of the obstacles, seen a lot of mistakes, he has the right people around him. And then just that the returns, of course, at the end, returns are important. They will be there. So those are the things that I would like them to know.
Great. Thank you so much. Ben, if you wouldn't mind just sharing any recent updates and then the status of your fundraise.
Sure, absolutely. So thanks for that, Paul. That was really good to hear and much appreciated. So currently at the moment, we are raising a $2 million seed round, and which we're about 50% through that sort of fundraising goal. We have about another $1 million to go. And at the moment, we just closed out our Republic campaign, which was more of a crowdfunding campaign that garnered us a lot of attention, more than 600,000 sort of people that were able to kind of lock eyes on Gesture. So we garnered a lot of customers from that, a lot of investors and those sort of things. So it actually ended up working out very well. So with that said, there's a lot of other sort of updates that are in the pipeline, as Paul mentioned. Unfortunately, a lot that I can say be excited about, but can't really disclose until those sort of things are kind of worked out on the back and kind of behind closed doors. But I can say that really big partnerships, distribution deals that are happening, we're really kind of taking this gifting sort of market by storm and really just reconfiguring how it's done. And lots of people are catching on fairly quickly. So it's really interesting. But at the end of the day, that's where we're at. Again, we just launched Gesture for Business, which is another big sort of one of our kind of bigger, higher ticketed items that's now available on Gesture, and that's at yourgesture.com/business. And that's really cool. So if you or a company or anyone else that that needs more of like gifting on an enterprise sort of level, you now can handle that sort of thing. So lots of really cool stuff happening. But yeah, I would say that those are probably some of the main things. And again, just a really great opportunity all the way around.
Great to hear. Thank you for taking the time today. It's much appreciated.
Thank you for joining us today. As always, be sure to leave a review, subscribe to this podcast, and share it with others. Let's go start up something today. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.